Let's continue our discussion. We do know that our economy is still trying to get back to the level before the pandemic. So how much do you think this Fed fund rate, also followed by the Bank of Indonesia's rate hike, will of course impact our economy, our buying power, and of course our inflation?
Well, the rate hikes should begin to contain inflation. And as I mentioned earlier, inflation in Indonesia is still fairly modest, about 2.2%. That's a figure that Bank Indonesia will be watching very carefully as well in terms of deciding how quickly they will have to begin normalizing rates. One of the positives about the Indonesian economy is that even if Bank Indonesia does begin to raise rates, say in the second half of the year, fiscal policy is still fairly accommodative. You know, the budget for this year has a deficit well beyond the usual limit of 3% of GDP, and so spending by the government is stimulative and will provide some help in terms of construction projects, as well as in terms of just support for small enterprises and such. And I think that's going to be very important as the economy gets back on its feet and accelerates further. There will be a number of small businesses that will have to reopen, and there will be a need for some liquidity out there, some access to capital to get businesses going again. And for this year anyway, I think there's a good potential that will exist. Next year, a little more risky, I think, will be in a higher interest rate environment. Plus, a government has messaged that the deficit will be brought back under control next year, and they'll try to adhere to that 3% of GDP maximum in terms of the annual deficit. So I think things look pretty good this year, and then if all goes well and there's some good momentum in the economy, next year should look pretty good as well.
Mm-hmm. Okay. Steve, when we talk about our inflation, it's still at a very low level right now with around 2% compared to the other maybe developed countries, for example, the US with around 7%. So what is the main reason behind this?
Well, one reason why inflation is very high in the US, one is that the unemployment rate is very, very low, and many people have left the labor market, and so wages are rising, and so there is a little bit of expectation and willingness to pay higher prices. Also, the supply chain disruptions around the world have caused an increase in prices, particularly for anything with electronic components because of the shortage of the semiconductor industry. Now, all those factors mean a little less for Indonesia. Indonesia, the main culprit is food. Food inflation food prices are driving a lot of the inflation in Indonesia, whereas the top line consumer price index is in the low 2s. Food inflation is over 3%. And some of that, again, has to do with high energy prices, which factor into the cost of production of food. But that is one factor that will have to be contained in Indonesia in order to contain inflation. Now, as the economy opens up, transportation bottlenecks are solved. And it gets easier to move food and other goods around Indonesia. That should help in terms of managing food prices and prices of other basic consumer goods that are.
Last question, Steve. What is Moody's projection on Indonesia's GDP growth for 2022 and also 2023?
So we're looking at 5% for 2022 and 5% for 2023. And again, something between 5.5%, I think, is fairly reasonable for Indonesia. One thing about Indonesia is that its growth through the pandemic didn't suffer as much, partly because the restrictions on social distancing were not quite as long-lasting or as severe as we saw in other countries. So in the sense that the damage to the economy may not be so great in Indonesia as it was in some other parts of Southeast Asia. So I think the economy will be able to get back on its feet. A lot will depend on opening up the economy to international travel, and also making sure that there is sufficient liquidity in the credit system to make sure that credit and liquidity is available for businesses that may need it to get back on their feet and get running in this period of economic recovery.
Okay.